So you've saved for a down payment, but what about those closing costs? These surprise a lot of buyers and they can add up to thousands of dollars at the closing table. Today, I'm going to break down what closing costs actually include and how you can reduce or even avoid some of them. And stick around till the end to grab my closing cost breakdown guide to help you plan ahead. If you're new here, I'm Bren Brewer, your favorite realtor, and let's get into it. Closing costs are the fees and expenses you pay to finalize your home purchase. They typically range from 2 to 5% of the home's price. So on a $300,000 home, that's $6,000 to $15,000 in additional costs. These cover things like lender fees, title insurance, and taxes. So let's break it down. So here's a quick breakdown of what's included. Lender fees. Those can include origination fees, credit checks, and underwriting costs. Title fees could be paying for a title search and title insurance to protect your ownership rights. Appraisal and inspection fees are required by lenders to verify the home's value. Property taxes and homeowners insurance, many lenders are going to require these to be paid up front. Prepaid interest is going to be covered interest from closing day until your first mortgage payment. It's going to add up fast, but there are ways to reduce these costs. If you want to pay less in closing costs, here's how. The first thing you need to do is shop around for a good lender. Different lenders have different fees and they also charge different rates. They also have different programs depending on if you're a first-time home buyer or a teacher, a firefighter, or a police officer. So shop around and ask about their programs. Also, ask that lender for credits. Some lenders offer credits in exchange for a slightly higher interest rate. Negotiate with the seller. In some cases, the seller may cover part of your closing costs. Use a first-time buyer program. I mentioned that earlier, but some local and state programs offer closing cost assistance. Your lender can help you with that as well. A little research can save you thousands at the closing table. So if you don't have extra cash for closing costs, you might be able to roll some of those into your loan. Some lenders allow this, but keep in mind, it's going to increase your total balance. You're going to also have to pay interest on those costs over time, and it's only available on certain types of loans. So if you're short on funds, this could be an option, but it's important to weigh the long-term costs. Closing costs are also separate from your mortgage payment. So you can expect at closing to pay your down payment plus the closing costs before you get your keys. Your first mortgage payment is going to be usually due 1 full month after closing. So if you close on June 15th, your first mortgage payment is going to be due on August 1st. This gap can help you rebuild savings right after closing. So a few final tips to avoid those closing cost surprises. Review your loan estimate up front. It's going to outline expected costs before closing. Ask your lender for a closing disclosure. You'll automatically get one 3 days before closing with final numbers, but you can ask before then as well. And don't forget about moving costs. After closing, you'll still have expenses like movers, utility deposits, and furniture. A little preparation now can save you a lot of stress later. Closing costs are one of the biggest surprises for buyers, but now you know what to expect and how to reduce those. If you want a full breakdown of closing costs, including where to negotiate, grab my home buyer guide in the link below. And before you go, don't forget to like this video, subscribe, and drop a comment. What's the biggest question you have about closing costs? Let's talk about it.